Hi, welcome back. Let's go to the next session, which is about the audit evidence. Yeah, in the last session, we have learned how to handle audit risk, where you have already identified all the areas that you need to focus on, and you have developed audit strategy and the audit response. So now we want to focus on the audit evidence. Okay. Now, before we proceed, we need to clarify the difference between audit procedures versus audit evidence. Yeah, please know that the auditors are basically collecting the evidence. Yeah, this is the evidence that will be collected by the auditor. All right, but how they collect the evidence is through performing audit procedure. So audit procedure is the audit work or the activity, right, which is used to collect evidence to obtain assurance for an assertion. Okay, example, let's say I want to obtain an assurance that the revenue that is stated in the financial statements are complete. So let's say I want an evidence on completeness, right? Okay, so my procedure will be, for example, take sample not take take samples of take samples of the goods dispatch note and agree what do you agree? You agree the quantity dispatched to the invoice raised. Yeah, so I want to take samples of the goods dispatch note and I want to agree those quantities dispatched to the quantities in the invoice that is being raised. This is my procedure, right? And then what will be the evidence that I will obtain from here? I will be obtaining evidence. My evidence will be invoices which are matched with GRN, goods dispatch note, which are matched with GDN. So if I see invoices which are already matched with GDN, those invoices are my evidence. How do I do it? I have to take samples of those GDN, right, and then I try to agree those figures. For example, I see 20 units being dispatched. I would like to find out, was the same 20 units dispatched, has there been a corresponding invoice? So whatever invoice that I already match, then that invoice matched with the GDN, I staple together and I put it in my audit working file. That will become my audit evidence, that look, I have an evidence that the whatever goods are dispatched have been invoiced. That means my revenue is actually complete revenue. Okay, so please understand the difference between audit procedure and audit evidence first. So you need to read the question carefully. Number 2, what are the types of audit procedures? Types of the audit procedures, or basically the audit work. So we have learned before types of audit procedures. Number 1 is your test of control, which is procedures to evaluate the operating effectiveness of what? Operating effectiveness of the controls in preventing, detecting, and correcting material misstatement. Yeah, all work that I do to evaluate the operating effectiveness of the controls in preventing, detecting, and correcting material misstatement. Yeah, example: take samples of sales order and obtain evidence that sales order has been authorized by the credit control department before sales order is processed. What am I doing? I am testing the control. The control is all sales order before it is being processed. The credit controller get to look at the order first, because he wants to decide how much should we give credit to this customer, new customer, or not, based on their credit rating. Okay, so I want to decide. So I will allow the credit controller to authorize the sales order by a signature. So that is the control procedure, okay, of the company. Yeah, but what do I want to do? I want to take samples of those sales order which has a signature of the credit control head, to see that there is this control is actually operating, it is effective. Yeah, because there is a possibility that the procedure is there, but they are able to process the sales order without the signature of the credit controller. Okay, so that is an example of a test of control. Then we have also learned in our previous session that there is substantive procedure. Another name for that is test of details. Okay, now test of details, what are these? These are procedures used to detect material misstatements. Okay, procedures used to detect material misstatements to reduce audit risk at a acceptable. Okay, how do you compare this to test of control? Test of control is a procedure to evaluate the system. Is the system operating or not? Whereas the substantive procedure is a procedure to detect the misstatement, meaning instead of us relying on the company's controls, right? So we are choosing not to rely on the company's control. We are wanting to detect the misstatements ourselves, instead of assuming the controls of the company are able to detect those errors. So instead of testing the controls, the process, I'm going to do my job again as if the controls are not working. Yeah, so we have to do our own evidence. We have to get our own evidence. So example of this will be to reduce audit risk to an acceptable level. Yeah, material misstatement. Example of this is, take samples of non-current assets in the non-current asset register and vouch to the physical tangible assets to ensure the assets recorded actually exist. Yeah, so what I'm doing is I'm taking samples of the non-current assets in the non-current asset register, and I'm going to vouch by inspecting the physical tangible assets to see whether these assets which are recorded, do they actually exist or not. So actually the company would have their own controls, meaning somebody in the company would be doing this job already. Yeah, so instead of me relying on that somebody, maybe let's say the internal audit department is already doing all this vouching between the non-current asset register to the physical. Somebody is already doing it in the company, but I'm going to assume that that control is not working, and I'm going to do the process of testing myself. That's what you call substantive test, meaning it's a procedure to detect the material misstatement at an assertion level already. Yeah, instead of test of control. So the same scenario, if you were asked to make the test of control of the same scenario, will be, your answer will be different. Your answer will be that I want to take samples of the reports of the internal audit department which shows evidence that the non-current assets register has been vouched to the physical. So we are testing somebody's else procedure. That is test of control. But substantive procedure is we are doing it ourselves. Yeah, students have a tendency to confuse these two things, test of control and substantive procedure. My advice is always test of control is testing the company's process. Substantive procedure is you are looking at the figures and all the assertions yourself. Okay, that should give you a picture about substantive procedure. Now, substantive procedure, we have learned before that there are two kinds of substantive procedure. Two kinds of substantive procedure. Number one is your what we call the test of details, which I have explained before, that this is basically asking for the breakdown or asking for the schedules, right? The breakdown or the schedules, and reviewing the movements. Yeah, reviewing the movements reviewing the movements from opening balances to closing balances. Yeah, so for example, if you are doing a test of details on the non-current assets, then you will ask, can you give me the schedule of the non-current asset, which means they will tell you the opening balance, then all the new assets that you have bought during the year, and then all the assets that you have disposed during the year, and finally that will arrive at your closing balance. So this will say, oh, that's how the movement is, and you're supposed to review the movement, meaning you're supposed to see whether the opening balances are accurate, whether the additions have been vouched to the source documents, whether the disposal has been actually removed from the non-current asset register. This is basically test of detail. And then we have also learned before about the substantive analytical procedure. Substantive analytical procedure, which is basically saying compare current year sales, for example, to last year and investigate any significant fluctuations. Okay, then besides this, you also can use things like proof in total. Yeah, please look at my previous session where I've explained how analytical procedures can be used for substantive test, meaning we can use this as part of our evidence. Yeah, analytical procedures can be used as part of evidence, but I'm not going in detail. I'm just going to go I just went through it shortly because today's session we want to go further into how to actually what are the techniques to do these procedures. Yeah, because in the exam they will give you a particular account and they will ask you to actually make the procedure. So I want to help you to design your own procedure. Yeah, there is no way we can memorize procedures. Yeah, but as you practice more, you will be able to design your own procedures in such a way that as what the examiner has advised, that procedures that the auditor design must be something which is imaginable, executable and practical. Yeah, meaning don't try to put too many memorized words. Yeah, I'm not saying don't put audit words. Put audit words there, but don't make it sound like you have memorized and generalized this procedure until it is out of context. You know, it is an impractical procedure. So use your logic and use audit words to ensure that you have made a good procedure. Yeah, so I want to tell you techniques. So what are the audit techniques? Yeah, normally this is divided into a mnemonic, which is A, E, I, O, U. Okay, and let me give you what each is. Yeah, A is analytical procedures. E is basically your inquiry and confirmation with third party. Okay, and then you have I is you have inspection of records and tangible assets. Okay, you inspect the records and you inspect the tangible assets. When I say records, I'm referring to words like cast the records. Yeah, you're casting. Then I'm using the words like trace. I'm using words like vouch. I'm using words like agree. Use these words. Yeah, use these words: trace, vouch, cast, agree. Don't use the word check. Yeah, don't use the word. So what are the words you don't use? The examiner has mentioned the students just like to say check this, check that, and it doesn't make any sense, because if you give those procedure to a junior auditor, he will not understand what are you writing. So use words which are specific. Yeah, so use words agree, cast, trace, vouch. What do you mean by trace, if you're wondering? Yeah, for example, you are tracing from the source document to the records. For example, from invoice to the sales day book. That is forward. Yeah, whenever you do testing forward from the source document or from the physical. So you did an inventory test count, right? You took physical count of a particular inventory and then you traced it to the records. So whenever you're moving forward, meaning from the source or the physical to the records, we are saying the word trace. Normally trace is used for completeness. Right? Vouch is the opposite of trace. Yeah, opposite of trace. Now what do you mean by opposite? Opposite means it's from the records to the source. Yeah, or physical. When you're doing that, you are trying to normally prove existence. Can you see that? Yeah, trace is for completeness. Trace it down, forward, and then that's for completeness. Vouch is to vouch it back, to see whether this figure that is in front of you does it really exist? Is it really accurate? Is it as per the source document? That is vouch. Yeah, okay. Casting talks about the totals. Cast the figures. You are inspecting the figures. Yeah, then agree the figures. Agree this with this figure. Agree your payables. Agree payables with supplier statement, for example. Yeah, that is also agree. Yeah, so use these words, okay, in order to have a better audit procedure. So you use inquiry and confirmation with third party, inspection, and then you have O is your observation. Yeah, observation. When do you do observation? You are observing, for example, observing the inventory count. Observing the inventory count to ensure compliance with the count instructions. Yeah, that will be your observation. So you actually please remember, a lot of students think that when an auditor goes to an inventory count, he's actually counting. Auditor is not counting. Auditor is just observing whether the inventory count has actually gone according to the count instruction. Yeah, the one who's counting is the client. The client has their counter, has their checker, has their reviewer. Yeah, so we are not the one counting. Yeah, we are just attending to ensure that they have followed. So we want to make sure that if there is any exceptions report, meaning from the records and to the physical there are differences, they are actually recording those differences, because we need to know those differences are accurate or complete or not. Maybe because we want to avoid inventory being overstated, yeah, or understated. So we do that through observation. So please remember, observation is mostly used for test on the control itself. Yeah, observation is mostly for test of control. Mostly for test of control. Okay, then you have your you have recalculate and reperform. Yeah, so recalculate is, for example, you recalculate, let's say, recalculate the invoice totals, okay, by using master price list. And goods dispatched. Yeah, but so I take price list and I multiply that by how many goods dispatched to ensure mathematical accuracy there. Yeah, so recalculate, meaning you are counting again. So that is a very much a substantive procedure, because you are not relying on the client's figures, you are counting the formulas again. So you know that the invoice totals is from the price multiplied by quantity. You take your calculator and then you count again. Can you see that? When I used to audit banks, I take the calculator and then I know the interest rates, I know how much is the outstanding balance, and then I will count again. Is the interest computation is correct, accurate or not? Yeah, so this is about the accuracy. All right, and then reperform is when you reperform a client's control, right? For example, one of the client's control is about that nobody can access a particular part of the computer system unless you use a certain password or a certain user ID and password. Yeah, so that's the control they tell you. They tell you that anything above $5,000, we will have to get the purchasing manager to use his password to approve the transaction. So that is a control informed to you. Now how do you test that control? Okay, what you do is you get another member of the staff's password. All right, and let's say I ask this another purchasing staff, hey, can you use your own password, and then you try to enter the system and see if you can approve this transaction. Yeah, so I actually enter again with his password and see can I, if above $5,000, does it actually work? Does the screen give alert signal that that you need the approval of the purchasing manager? Yeah. So you test the system again by putting someone else's password. That is also where we call the test data. Yeah, it's normally for test of control. Are you with me? Yeah. So AEIOU, you use analytical procedures. You do inquiry with the management. You send confirmation to third parties. Who are these third parties? Are normally the experts. Yeah, experts meaning lawyers, meaning independent valuation experts. Independent valuation experts. Okay, and then you may also send letters to the bank to confirm the bank balance, for example. Yeah, you may inquire and discuss with the management. Yeah, you need to know that, but please remember, this inquiry itself is not an evidence itself. That's why in the beginning I wanted to be clear to you that procedures and evidence are different. Procedures is what you do, your activity, your work, audit work, for the purpose of collecting evidence. So when you do inquiry, you don't get evidence. That's one of the procedures you do. But with that inquiry, when you discuss with the management, then you can, for example, let's say I'm discussing with the management why you are using the useful life of an asset as 5 years. They said because of the last 5 years, the last asset that we use, the replacement was done after 5 years. That's the reason we are using 5 years as a basis, as a useful life. Said, oh, okay, that's great. So can I have a copy of the last assets acquisition date? When did you acquire it, and then when did you sell it, to confirm that the 5 year is a valid management assumption. Then you get an evidence. So inquiry leads you towards an evidence. Can you see? Please get that clear. Yeah. Okay, so that's inquiry. We have inspection of records, then observation, recalculate, and reperform. I want to highlight to you about the fact about this inspection of records. Yeah. So keep this AEIOU. I just want to additional note. Yeah, please write down additional note about inspection of records. There are additional things that I like to add in this I. Yeah? AEIOU. In the I, add these three things. Yeah, S, and then your C, and then your D. Yeah, SCD. In the SCD is what basically about your subsequent events as evidence. Yeah, I give you example. I want to be sure, I want to have assurance that the receivables at the year end, they actually are not fake receivables. All right, for example, I want to have an assurance about basically the existence. Yeah, we say that existence, do this receivable actually exist, or are they fake receivables? All right, so one of your procedure can be that I would like to review post year end cash receipts from receivables. Yeah, so I will review the post year end cash receipts from receivables to confirm, right? So to confirm that the this receivable is a recoverable debt. Okay. Now you will have lot of examples about the subsequent event being used, and subsequent event is one of the favorite procedures of the examiners, because many of the candidates don't realize that the auditors come in after the year end, and then they have an advantage that I can check the figures which are at the year end by confirming to the events that happen after the year end. One of the example is the receivables are actually paying or not, or is it a fake receivable. Another example is about the fact, for example, you have sales returns, so we would like to, for example, review those sales returns at the year end, right? So sorry, at the post year end, to ensure, yeah, so if you have receivable sales returns after the post year end, to ensure that the sales in the previous year has been reversed. Yeah, because many management, what do they do is they boost up their sales in the October, November, December, and then in January, February there is lots of high sales returns. Because at the year end they get bonus out of those sales. So there's a one way of faking those sales. So what do we do as auditors? We go and look at after the year end, has there been heavy sales returns, the credit notes. So I want to know, do you have a lot of credit notes after the year end? I want to get a copy of that, because I just want to ensure that maybe they are related to the sales in the previous year, and if they are, I have to reverse the last year's sales. So these are examples of subsequent events used as an evidence by conducting those procedures. Another thing that you can add on to the inspection of documents is cut-off procedures. For example, obtaining copies of GDN in the which period, in the pre-year end and in the post year end. Okay, obtaining copies of GDN in the pre-year end and in the post-year end, and I want to ensure that the GDN, the corresponding sales, to ensure that the corresponding sales is posted in the correct period. Okay, so because there is a possibility that my sales look bigger because some of the GDNs that were in the first week of January after the year end have been posted in this year end. Alright, or my sales may look smaller because some of the GDN in this year end have been posted to next year's sales. Because remember, once the goods are dispatched on the same year or the same period, you must record the sales. So GDN must be matched where to the correct timing. Because cutoff means the transactions are recorded in the correct period. So we have to ensure that the transactions are not posted to the following year, or posted to the next year's transactions are posted in the current year, then we will have a cutoff error. Yeah. So there will be cutoff procedures that you need to do with regard to inspecting the documents. Yeah. The in addition, you must also review the disclosure, because disclosure completeness and appropriateness must be, yeah, so is it disclosure is complete and appropriate in compliance with the IS. Yeah, I always joke with the students that when you run out of audit procedures points, then you can always put this as an additional one more point, that you must review the disclosures completeness and appropriateness to ensure that it is in compliance with the IS. So because that's if you are not giving a full disclosure as per the IS, some disclosures can be create a material misstatement. For example, not disclosing the what you call it, related party transaction. Yeah, if you have intercompany transaction, you must disclose it. If you have revaluation that has taken place, you must disclose that, right? If you have any customer who is suing you and there is a lawsuit that you are facing, and there is a high chance that you are going to lose the case, you must disclose the what you call it, the contingent liability. Yeah, so disclosures must be reviewed. So please add that note into your I. Remember AEIOU, and then add that with the SCD, subsequent cutoff, and then the disclosure. Right. In the next session, I'll do a question with you to apply these procedures into the exam questions. All right. Thank you.